Welcome to the Trade Trends channel. In this video we're going to talk about Bollinger Bands, why we use them, their formula, examples, chart analysis and trend trading. A Bollinger Band is a technical analysis tool that consists of a series of trendlines placed two standard deviations, positively and negatively, away from a security's price's simple moving average, SMA, but that may be altered to user preferences. Bollinger Bands were created and trademarked by John Bollinger, a well-known technical trader, to help investors uncover possibilities that offer them a better chance of correctly detecting whether an asset is oversold or overbought. The first step in constructing Bollinger Bands is to find the security's simple moving average, which is usually a 20-day SMA. As the initial data point, a 20-day moving average would average out the closing prices for the first 20 days. The next data point would subtract the first price, add the price on day 21, and average it, and so on. The standard deviation of the security's price will be calculated after that. In statistics, economics, accounting, and finance, the standard deviation is a statistical measurement of average variation. The standard deviation of a data collection indicates how much numbers deviate from an average value. The square root of the variance, which is the average of the squared differences of the mean, may be used to determine standard deviation. Bollinger Bands are a common trading strategy. Many traders feel that the closer prices go to the top band, the more overbought the market is, and that the closer prices get to the lower band, the more oversold it is. When employing Bollinger Bands as a trading technique, John Bollinger has a set of 22 guidelines to follow. Bollinger Bands are used to frame the stock's 20-day SMA with an upper and lower band, as well as the daily price fluctuations. Because standard deviation is a measure of volatility, the bands expand as the markets get more volatile, while the bands shrink as the markets become less volatile. Bollinger Bands don't really lag as much since they alter with the price automatically. A Bollinger Bands may be used to examine the strength of market trend and provide a wealth of useful information. Whenever it comes to analyzing trend strength utilizing Bollinger Bands, there are just a few conditions to keep in mind. Price tends to remain close to outer band during strong trends. As the trend proceeds, pricing moves away from outer band, indicating losing momentum. This image illustrates how much info a trader can get only from Bollinger Bands. Let me guide you through first 5 points. Price is now in a steady downturn and is constantly trading around the outside bands. It is a strong bearish indicator. When the price fails to reach the outside ring, it rises sharply. Failure to reach bands unexpectedly might indicate diminishing momentum. 3 swing highs followed by 2 lower highs. The first swing high was successful in reaching the outer band, but the other 2 were not. This is a bearish indication. Price held firmly to the outer band throughout a severe downturn. It attempted to flee, but bears always had the upper hand. The price consolidates sideways, failing to reach the outside band, and the downtrend is halted by rejection pin bar. Bollinger Bands may tell you a lot about trend strength and bull-bear balance. We recommend using Bollinger Bands with RSI. It's a great fit. You should be aware of the following 2 sorts of tops. Price doesn't reach the outer band as the uptrend weakens. RSI divergence often accompanies this indication. Price rises into outer bands during a consolidation, which are instantly rejected. Both eventualities are shown in the image. The top following a divergence is the first. You can observe how trend weakened before failing to reach outer band and then reversing. Because price failed to break higher during the downtrend, I highlighted a second spike with an arrow. That was a trend continuation indicator. Bulls lacked power, as seen by the forceful spike followed by an immediate rejection. The Bollinger Bands, as you'll see, are multifaceted market trading indicators that may offer you with a wealth of information regarding buy and sell balances, the trend and future trend changes. Bollinger Bands are a wonderful basis for a trading technique when combined with the MA and the RSI. If you've got something to say about Bollinger Bands, maybe or something you want me to cover next time, please drop us a comment, and if you like this video, I implore you to please make sure you smash that like button, subscribe and hit the bell icon so that you see more videos like these. Thank you very much for watching, and happy trading.